When you print money on the scale, like what modern nations are printing it, Japan, the United States, Europe, etc., we're getting into new territory in terms of size. There's never been anything quite like what we're doing now, and we do know from what's happened in other nations. If you try and print too much money, it eventually causes terrible trouble, and we're closer to terrible trouble than we've been in the past, but it may still be a long way off. I certainly hope so. When Volcker, after the 70s, took the primary to 20 and the government was paying 15 on its government bonds, that was a horrible recession, lasted a long time, caught with a lot of agony, and I certainly hope we're not going there again. I think the conditions that allowed Volcker to do that without an interference from the politicians were very unusual, and I think in 2020, inside it was a good thing that he did it. I would not predict that our modern politicians will be as willing to permit a new voter to get that tough with the economy and bring on that kind of recession. So I think the new troubles are likely to be different from the old troubles. You may wish you had a Volcker-style recession instead of what you're going to get, the troubles that come to us and could be worse than what Volcker was dealing with and harder to fix. Think of all the Latin American countries that print too much money. They get strong men and so forth. That's what Plato said. It happened in the early Greek city-state democracies, one person, one vote, a lot of legality, and you get demagogues, and the demagogues lather of the population, and pretty soon you don't have your democracy anymore. I don't think that was a crazy idea on Plato's part. I think that accurately described what happened in Greece way back then, and it's happened again and again and again in Latin America. We don't want to go there, at least I don't. We've done something pretty extreme, and we don't know how bad the troubles will be, whether we're going to be like Japan or something a lot worse, and what makes life interesting is we don't know how it's going to work out. I think we do know we're flirting with serious trouble. I think we also know that some of our earlier fears were overblown. Japan is still existing as a civilized nation in spite of unbelievable access by all former standards in terms of money printing. Think of how seductive it is. You have a bunch of interest-bearing debts, and you pay them off with checking accounts which you're no longer paying interest. Think of how seductive that is for a bunch of legislators. You get rid of the interest payments, and the money supply goes up. It seems like heaven, and of course, when things get that seductive, they're likely to be overused. If you start to think about it my way in life, I was not predicting little short-term differences between the Russell Index and the Standard & Poor's Index. I don't have any opinion about which index is better at any given time. I never even think about it. I'm always just looking for something that's good enough to put more money in, or Berkshire money in, or Daily Journal money in, and I figure that I want to swim as well as I can against the tides. I'm not trying to predict the tides. If you're going to invest in stocks for the long term or real estate, of course, there are going to be periods when there's a lot of agony and other periods when there's a boom, and I think you just have to learn to live through them. As Kipling said, treat those two imposters just the same. You have to deal with daylight and night. Does that bother you very much? No. Sometimes it's night, and sometimes it's daylight, sometimes it's a boom, sometimes it's a bust. I believe in doing as well as you can and keep going as long as they let you. I've always believed that nothing was worth an infinite price. Even an admirable place like Costco could get to a price where you would say that's too high, but I would argue that if I were investing money for some sovereign wealth fund or some pension fund and a 30, 40, 50-year time horizon, I would buy Costco at the current price. I think it's that strong in enterprise and that admirable place. What impact has passive investing had on stock? Another thing that's coming, we have a new bunch of emperors, and they're the people who vote the shares and the index funds. Maybe we can make Larry Finken the people at Vanguard Pope. All of a sudden, we had this enormous transfer of voting power to these passive index funds that is going to change the world, and I don't know what the consequences are going to be, but I predict it will not be good. We have a hugely strong economy and a hugely strong technical civilization, and that's not going away, and the knowledge and so forth. And you can't believe what a modern factory looks like when you fill it with robots, and that's coming more and more and more. And it's coming to China too, for that matter. And so those trends are inevitable, and I don't know how it's all going to play out. But I think it does create adjustment problems if you have a fine unionized job and they replace you with a robot. You've got a difficult problem if you've got a company like Kodak and they invent something new that obsoletes your product. You have a problem too, and you solve that by dying. A lot of people don't like that solution because all those problems are real, and because it's so tempting to get rid of your debt by just giving a guy a non-interest-bearing checking account where you used to have to pay him interest every month. Not only do we have a serious problem, but the solution to it that is the easiest for the politicians, and for the Federal Reserve too for that matter, is just to print more money and solve the temporary problems that way. And that, of course, is going to have some long-term dangers, and we know what happened in Germany when the Weimar Republic just kept printing money. The whole thing blew up, and that was a contributor to the rise of Hitler. So all this stuff is dangerous and serious, and we don't want to have a bunch of politicians just doing whatever is easy on the theory, and that didn't hurt us last time. So we can double it and do it one more time, and then we double it again, and so forth. We know what happens on that everlasting doubling. You will have a very different government if you keep doing that enough, and you're flirting with danger somewhere unless there's some discipline in the process. But I don't regard Japan as in some terrible danger, having they've done a huge amount of this and gotten by with it. I don't think we'll be as good at handling our problems as Japan is if taxes were not an issue. In my whole adult life, I've never hoarded cash waiting for better conditions. I've just invested in the best thing I could find, and I don't think I'm going to change now, and the Daily Journal's used up its cash now. So we don't have a solution to your problem. We're just coping with it as I've described given the valuation and market correction. In early 2020, why is Berkshire not picking up or adding any new companies to its profile? Of course, kudos to the team and picking up Apple shares a couple of years back. That's paying off for sure. The reason we're not buying this. We can't buy anything that prices we're willing to pay. It's just that simple that other people are bidding the price, and a lot of the buying is not by people who really plan to own them. A lot of it is feed ribbon buying private equity and buys things, so they can have more fees by having more things under management. Of course, it's a lot easier to buy something you use somebody else's money. We're using our own money, and at least that's the way we think of it. By the way, it's not a tragedy that Berkshire has some surplus money and they're not investing. We look more responsible with the extra wealth, and we are more responsible with the extra will. The shareholders who are worried about the future because it looks complicated and difficult and they're hazard, I want to say to them what my old torch professor said to me. Charlie, he'd say, "Charlie, tell me what your problem is, and I'll try and make it more difficult for you." And he did me a favor by treating me that way, and I'm just repeating his favor to you. When you're thinking the thoughts you're doing, at least you're thinking in the right direction. You're worried about the right things. All you people that are worried about the inflation and the future of the republic, and so forth. Inflation is a very serious subject. You can argue it's the way democracies die and democracy dies in Latin America. Inflation is a big part of it, so it's a huge danger. Once you've got a populace that learns it can vote itself money, and if you overdo it too much, you ruin your civilization a lot. Of course, it's a big long-range danger if you look at the Roman Republic. Even after they went to an empire with an absolute ruler, they inflated the currency steadily for hundreds of years, and eventually the whole damn Roman Empire collapsed. So it's the biggest long-run's danger, probably apart from nuclear war. I think the safe assumption for an investor is that over the next 100 years the currency is going to zero. That's my working hypothesis. A very dangerous environment was what brought in Hitler was the combination of the Weimar inflation, where they utterly destroyed the savings of the middle class in Germany, followed by the Great Depression. It was a 1-2 punch, and Hitler came in crazy demagogue with 40 of the votes, and pretty soon we had a dictator hell-bent for world war. So the history is not pleasant, and Germany was a very advanced and civilized nation, but that Hitler took over. I always say that the interesting thing about that was little Albert Einstein, a little Jewish boy, got his entire primary education with the insistence of the Catholic Church in Germany. Now that is a very civilized nation, so if you let your nation deteriorate too much, what you get is a Hitler. We proved, of course, in a modern democracy in the age of Keynes you're going to get big government reaction. The reaction this time was bigger than it's ever been before in the history of the United States. They just threw money at the problem, and they were probably right to fear what was going to happen, and to be quite liberal throwing money at it, but they probably overdid it a little. They threw so much money so fast that it's hard for the restaurants to get people to do the work, but I don't criticize it. It's hard to make these decisions under pressure. Well, you have to be optimistic about the competency of our technical civilization, but there again it's an interesting thing if you take the last 100 years, 1922 to 2022, most of modernity came in that 100 years, and in the previous 100 years that got another big chunk of modernity, and before that things were pretty much the same for the previous thousands of years. Life was pretty brutal and short and limited. And what have you? No printing press, no air conditioning, no modern medicine. I don't think we're going to get things that were in what I call the real human needs. Think of what it meant to get safe first. You got the steam engine, the steamship, the railroad, and a little bit of improvement of farming, and a little bit of improvement in plumbing. That's what you got the 100 years that ended in 1922. The next 100 years gave us widely distributed electricity, modern medicine, varmints, firefighters, the automobile, the airplane, the records, the movies, the air conditioning in the South, and I think what a blessing it was. If you wanted 3 children, you had to have 6, because 3 died in an infancy. That was our ancestors. Think of the agony of watching half your children go. It's amazing how much achievement there's been in civilization in these last 200 years, and most of it in the last 100 years. Now the trouble with it is that the basic needs are pretty well filled in the United States. The principal problem of the poor people is they're too fat. That is a very different place from what happened in the past. They were on the edge of starving. And what happens is, it's really interesting, is with all this enormous increase in living standards and freedom and diminishment of racial inequities and all the huge progress that has come, people are less happy about the state of affairs than they were when things were way tougher. And that has a very simple explanation. The world is not driven by greed. It's driven by envy and the fact that everybody's 5 times better off than they used to be. They take it for granted. All they think about is somebody else has having more now, and it's not fair that he should have it and they don't. That's the reason that God came down and told Moses that he couldn't. It's weird for somebody my age, because I was in the middle of the Great Depression. When the hardship was unbelievable, I was safer walking around Omaha in the evening than I am in my own neighborhood in Los Angeles, after all this great wealth and so forth. And I have no way of doing anything about it. I can't change the fact that a lot of people are very unhappy and feel very abused after everything's improved by about 600, because there's still somebody else who has more. Think of the pretentious expenditures of the rich, who in the hell needs a real Rolex watch. So you can get mugged for it, you know what I mean. Yet everybody wants to have a pretentious expenditure, and that helps drive demand in our modern capitalist society. My advice to young people is don't go there. The hell with the pretentious expenditure. I don't think there's much happiness in it, but it does drive the civilization. You have to choose the least bad of a bunch of options that frequently happens in human decision-making, and the Mungers have Berkshire stock, Costco stock, Chinese stocks, through little bit of Daily Journal stock, and a bunch of apartment houses do. I think that's perfect. I think it's okay. Yes, I think the great lesson from the Mongers is you don't need all this damn diversification. That's plenty of your lucky if you've got four good assets. I think the finance professors and sell the idea that perfect diversification is professional investment if you're trying to do better than average. You're lucky if you have four things to buy, and to ask for 20 is really asking for egg in your beer. It's very few people have enough brains to get 20 good investments. It's going to be way harder for the group graduating from college now for them to get rich and stay rich and so forth. Going to be way harder for them than it was for my generation. Think what it costs to own a house in a desirable neighborhood in a city like Los Angeles. I think we'll probably end up with higher income taxes too, and so on. No, I think the investment world is plenty hard, and I don't think in my lifetime 98 years it was the ideal time to own a diversified portfolio of common stocks that updated a little by adding the new ones that came in, like the apples and the alphabets and so forth, and I'd say the people got maybe 10 or 11%. If you did that very intelligently before inflation, and maybe 9% after it played, that was a marvelous return. No other generation in the history of the world ever got returns like that. And I don't think the future is going to give the guy graduating from college this year nearly that easy in an investment opportunity. I think it's going to be way harder. Some people are gifted enough that they can invest in hard to value difficult things other people. I think it would be very wise to have more modest ambitions in terms of what they choose to deal with. So I think you have to figure out your level of skill, or the level of skill your advisor has, and that should enter the equation. But to everyone who finds the current investment climate hard and difficult and somewhat confusing, I would say welcome to